Markets are attempting to make a little comeback here off of the back of the FOMC meeting yesterday and Powell's announcement. We got a little green on the board first time today. So markets have been a little bit up and down today. And the Dow is up just about 0.03%, but NASDAQ still down 1%, S&P down 0.37 as the markets are testing critical levels, including the Dow. Bitcoin right now is up just a little bit and still rejecting that 2017 all-time high. So what is going on? So why are the markets contracting so much and bouncing around so much? It's about 1 hour till the close. So we'll just have to see how markets close, whether or not they continue the selling into the close or if they can finish up today. But, you know, Powell basically, the biggest message he sent yesterday is we're going to go higher than we thought and than you think we are. We're going to get there faster. We're going to stay there longer. But the most important message that he sent was that you're not going to see zero interest rate environment anymore. They're going to stay above core inflation right now, which is where the federal funds rate needs to be in order to get inflation down. Right now, they're targeting maybe 4.5%, 5% going into next year, or even into the first part of 2024. And we'll see that will obviously adjust as the data comes in, inflation prints, things like that. But right now, they're targeting 4 to 4.5% in 2024, where they can plateau and stay above inflation. And he said he didn't say anything about stopping hiking. He didn't say anything about reversing course when asked. What he did say was, we're going to stay at it as long as it takes, doing whatever it takes, using all of our tools at our disposal. And it's the Fed's opinion that labor is still too strong, the labor market, the housing market is still too frothy, and that the economy is still strong enough to withstand all of the measures they're taking. And he did say, unfortunately, in order to get inflation down, that is going to cause pain for businesses and consumers, just like he said the last time in Jackson Hole. So that's what we're facing right now. But the big takeaway that the market starting to price in a little bit, but hasn't fully digested yet, is that statement that we are not going back to zero rate policy, and that the Fed is not going to lower rates below inflation once they get there. They're not there yet. And using the word restrictive versus neutral or accommodative. He wants to keep financial conditions restrictive and tightening. So that's what played out yesterday. And again, not a whole lot of reaction in Bitcoin, tested down 18,177. So getting closer and closer to testing that June low, just like the markets. Here's the Dow knocking on that June door low. Same thing with NASDAQ, same thing with S&P, all at very critical levels. And once they do test that, then we will see. We're going to find out, are they going to hold, or is our market's going to break down to the next level and then kind of consolidate a little while we wait for the next inflation print and wait for the next Fed decision. That's kind of what's been going on, right? The market's just been kind of pricing in ahead of the Fed, maybe drops a little bit afterwards, had a nice little rally, drops, little rally, drops, big rally, drops. And when you look at this type of price action and you go back and compare it to previous time periods, here's 2008 and 9, and I know there's some charts out there kind of tracking the price action here, showing the comparisons. And same kind of thing, the market worked its way down, had a nice little rally, dropped, rally, and then that was it. It was lights out. But even then, had a nice little rally. And these rallies were no slouch. This was a 25% rally in the S&P right there, right before the final capitulation. This first rally was a 13% rally. If you go back to the dot-com bubble, 2000, 2001, same kind of thing. The market kind of unwound itself into the lows as economic data came in, and you had these nice little rallies. The first one, real rally, was about 10%. Then the next one, this was a nice big rally here. Let's take a look at this one. This was 21%. Then the last big rally before the final capitulation was about 24%. And then even at the bottom, nice big rallies off the bottom, off these lows of 24%. So I think, to me, this is the S&P. The 2001 bear market kind of more, that's what this feels like, our price action that we're seeing now versus 2008, where you had that big bank collapse and capitulation. This feels more like what we're doing right now. And if you go look at the S&P, you can kind of see how that plays out. And this rally here was right in line, about 20%. And it was the same amount of days after the high, pretty close in terms of that rally. The bottom was pretty close in terms of the low. Put it here in June. So right now, this is kind of what's expected. And again, when will this all stop? This stops when the Fed says it's time to stop. When they say we no longer have to hike, we can kind of hold here. We see inflation coming down, and we see conditions starting to stabilize a little bit. And then, of course, you always have the geopolitical risks out there with Russia mobilizing, threatening nuclear weapons, things like that. So we'll just have to, obviously, there's nothing we can do there, but just kind of wait that out and see. But here's Bitcoin on the daily. And oh, here's the other thing too. Let's go ahead and look at the weekly here as traditional markets continue to test these moving averages, getting much closer to that 200-week moving average critical support level for all of the traditional markets. And then when you look at it on the daily, the 50-day, it's below 50-day moving averages there, have lost all that since this is the 50, 100, 200. So critical times, we look at Bitcoin here below all daily moving averages. And then if you get it on the weekly, still well below that 200-week moving average. So the real question is, what's next for Bitcoin? Right now on the weekly, rejecting on that 2017 all-time high, the 2017 high, and the major trend lines that I'm watching in terms of, price to see if it finds support, resistance, or breaks out from there. So a couple of things. It's definitely, I think Bitcoin's definitely going to go down and retest this June low that we put in here on June 18th, June 19th. If that holds, then that's great. Then we can start finding a bottom. But given the current outlook and what's going on in the economy, the odds are of this holding are not good. But it could, and we'll just have to wait and see. I don't think it will. I think we have a little bit more downside to come, especially with inflation continuing to rise, with the slowing of the economy that's going to result from all the Fed tightening, and they're going to have to stay out of it till the economy does slow. A lot of risks out there. So here's Ethereum. Ethereum's starting to unwind from all of the ETH merge speculation. 892 is where that June low comes in for ETH, still well above that, but moving and working its way back down, just like we saw over here and here in these bear flag ranges. And then of course all of the major cap altcoins kind of doing the same thing. So it's still definitely risk off, and we just have to monitor, see what's going on, watch the markets into the close. Friday could be a volatile day, potentially a more downside. Investors do not like to go in the weekend long in uncertain times like this with all the risks that are out there. So these are the things that I am looking at. And in the markets right now, stop this screen share here. So yep, so those are the things that I'm looking at. I'll be back on the next video tomorrow to kind of give a weekend update and what to look out for over the weekend as we continue to navigate this critical time, critical environment with critical support levels in all markets.